All right. So it is Wednesday, April 19th. Hope everybody had a good day today. Want to review the trades we took today, why I took them, why I didn't take some of the other ones. And yeah, so starting off, want to talk about my bias going into today. I did have a bullish bias going into today, but first thing I wanted to see is I wanted to see some sort of liquidity being swept. And we actually ended up sweeping liquidity on NQ and not ES. So looking at the open going into today, I was bullish because we had a 1 hour SMT divergence. We can see NQ swept liquidity from this low. ES never swept that. So now we have bullish SMT. This is what I was watching. This is what gave me that bullish bias. Now that we have liquidity swept on NQ, most likely expecting some sort of bullish reversal. Looking on a 5-minute, I then also had even more bullish bias because we formed a 5-minute SMT. So this going into this morning, I was expecting a big push up to take some sort of buy side liquidity. On NQ, we had equal highs. This was the draw on liquidity. I knew that we were most likely going to take this out. Didn't end up taking it out as cleanly as I would have wanted it to do. And then on ES, we also had equal highs here and then equal highs up here that ended up getting taken out. And then, of course, we go right back to weekly opening gap. On NQ, we go right back to weekly opening gap. NQ actually never closed above weekly opening gap, acted perfectly as resistance, and then sold back off in the afternoon session. So first trade that I took, we have liquidity swept on NQ, 5-minute SMT starting to form, going into a smaller time frame. I ended up getting a breaker block on a 2-minute time frame here. Looking at if I zoom into a 1-minute, we have this 1-minute breaker block. Once we form this SMT, I want to see some sort of market structure shift, right? So this would have been the best entry. Again, at the time, I didn't see this entry. I looked when I opened the market, we were already up here. But this would have been your first entry right here, pullback. Even though there's no fair value gap here, you have the breaker block as the entry. Again, as long as you're entering with proper risk management, you know what the draw on liquidity is. You have 5-minute SMT, you have 1 hour SMT. You know the draw on liquidity at least will be this high next is what we know. So once we get above this, this would be now your market structure shift. Let me draw this in. So I wanted to look for some sort of long trade to get in here. And I anticipated us forming a turtle soup entry, which would be the SMT, right? Once we get break of structure, we pull back into a PD array, whether it be a breaker block or a fair value gap, whatever it is. You can see here, we pull back to this fair value gap and we pull back to the breaker block. And at the time, if we look at the NQ on the 1-minute, we were also forming a lower low, right? So if I draw in here too, we also have this past fair value gap acting as support. Come down once again, hold this the first time, come up. Again, don't take out the high. That's what we need for turtle soup. We don't take out the high. Retrace, form one more low, form that SMT. So this is where I looked for, I wanted to see confirmation of this long first. I didn't want to take this entry quite yet until I saw that turtle soup form. Once I saw SMT divergence, when we pulled back to this breaker block, pulled back to the fair value gap, we continued to hold this. Then I saw this candle come in, and then this was the fair value gap that I wanted to look to hold, because then I have multiple confirmations. I have overall on a bigger time frame, we're bullish. On a 5-minute, we're bullish. We have SMT. We have market structure shift. We're holding this. We know the draw on liquidity is this. Once I see this displacement up and a hold of here, we also have this short-term SMT. I have everything showing me that we are bullish to go to buy side. So I have a lot of conviction and a lot of confluence to take longs here. I wait for a pullback into this fair value gap. We get a nice entry. And my first price target, buy side liquidity up here. And then I let the rest run to equal highs. I ended up getting stopped out at break even. I entered here. Ended up getting stopped because I didn't get the best fill. I got filled right here. Ended up getting stop hunted and then kind of chopped. But honestly, I didn't really want to hold through this chop anyway. Created 5 equal lows here that, again, still has not been taken. So this will be hunted probably tomorrow. So I pulled this over. So I did take off 50% here. Stop was at the low. Decent risk reward, 1.88. But again, only took off half of my position. So rest got stopped at break even. Good trade to start the morning. Not the best. Again, action wise, if we look at NQ at this time, NQ got a big push, just clean action to the highs. That's what we want to see. But looking back on NQ, for me, there was really no trade here. I mean, there could have been actually a long here in this fair value gap. I mean, once we get that SMT, Once we get that SMT formed, I then want to see a fair value gap formed. So we do get that. We did hold it. That would have been a long entry there on NQ. And honestly, going into the next couple of days, I'm going to be watching NQ more than I am ES, just because the action has been so much better on NQ. Like even this action, I would much rather trade this than I would this. And yeah, so that was the first trade going into today. We ended up, of course, the draw on liquidity still got hit. It just is not as clean as I want it to be. Sometimes we hold through this, but again, I did get stopped at break even. If I didn't, I would have held through this. And then we eventually did take out equal highs, and then eventually did take out equal highs up here. And then all the way rode up to take out buy side liquidity, which was on the 1 hour time frame. Let me pull this up here. On the 1 hour, which was this previous high, we ended up taking that out. And I actually do want to look if there was some sort of short setup here. I wasn't really paying attention, but since that external liquidity got swept, we'll see if there was something there. But in the morning, bias was very bullish, had everything showing that we wanted to have some kind of reversal. So yeah, I ended up taking another trade here, which I took a loss. Where was it? I think it was right here. Yeah. So I ended up taking a spontaneous short, which is, again, not a good thing to do. This was not a good trade. And the reason this was not a good trade is even though I have everything that I want, I failed to really zoom out and see the bigger picture of where price is most likely to go. I ended up taking a short setup here, stop here. My price target was these equal lows. Now, it's not a bad setup. Again, we have 5 equal lows here. We have break of structure. We have equal highs being swept, right? It's not a bad setup. But the thing is, if I was to zoom out, like in a 15-minute, and I see that we're having this push up, number one, first thing I want to draw in is fib. If I was going to draw in from the high to the low, I know that price is most likely going to retrace to 50% because NQ already took liquidity. Since we have this SMT, NQs took liquidity. We have 5-minute SMT. We're having bullish momentum. We've taken this high out. We're having strong volume. This buy side is not important to us. Now, it's a target if we're long, but this buy side is not important for us to take a short off of. We need some sort of external liquidity. So that's why that was not an A+ setup to take, right? Because if I was to draw on a fib here from the high to the low, we have not yet hit 50% retracement, right? So this definitely again, we know it's most likely going to retrace to weekly opening gap as well. So if I was to take any short position, it wouldn't be from this high. It wouldn't be from this high. It would have to be from an external liquidity, which would be this high here. That's why this short setup was not an A+, ended up getting ran through. And if we were looking at NQ at the time, go back to NQ at the time, which was, I think I went too far, right here. NQ had not taken buy side yet, right? NQ looks so bullish. This is we took a trade on NQ as well, targeting equal highs. We know the draw on liquidity for NQ is these 2 equal highs here. We knew that going into today. I kept saying that. We took a long position to go to equal highs. So I failed to also take into account that the draw on liquidity for NQ is also higher, which will most likely push ES with it. So this was not a good trade. It was spontaneous. I took a previous loss before, jumped back into this, wanted to make it back, and I didn't evaluate it. I didn't evaluate it first, and I also broke my rules too because I don't like trading anything if there's equal highs or equal lows above it. And we had 3 equal highs stacked here. So this was not a good trade to take. I'll be the first to admit when I make a mistake, and this was absolutely not the best trade I could have possibly made. It's not a terrible trade. Again, I'm still trading something in my model. We still get some sort of liquidity. We have equal highs. I think the biggest reason for me taking this trade is because we had these equal lows. I wanted to see these equal lows taken. But again, on NQ and ES, we were most likely going to head towards buy side, which hasn't been taken yet. And then we get that push up on NQ, which pushes ES with it. So then the rest of the day, not really any other set. I mean, this actually doesn't look too bad. This would have been a possible setup long. Let me see if there's some kind of SMT here. We actually formed equal lows on here. So again, we've been back testing a little bit. Haven't fully marked off if this is something we want to add to our books, but we've definitely been watching recently SMTs when ES or NQ is creating equal lows. So this is another example of that, where NQ forms equal lows, but ES forms lower low. right? We still put in a low here. So this would be a nice example of that, back testing, seeing if equal lows are considered SMT. This is a good example. It played out. Once we get this low being swept, big push up, we have that market structure shift. Again, the biggest thing for this trade is because you have all these equal highs stacked, right? You have 1, 2, 3, 4, 5 equal lows or equal highs. You get a push up displacement. You get a fair value gap. Pull back to this. This would have been a nice long entry for a potential scalp. Risk to reward on this, not too bad. 2.5, nice little scalp, pull back to fair value gap, targeting equal highs. Not too bad. Maybe leaving a runner to equal highs up here. You know, who knows? That would have been something. Rest of the day, I want to see if there's any setup after buy side. Now, I don't like this setup. I know somebody in the Discord was asking me if this was a short. And the reason I don't like this as a short is even though we have liquidity swept, we have big displacement. I still would want to see some low being taken to show that we want to head lower, right? Because there's no break of structure. There's no market structure shift yet. We could still head back higher. So I'd want to see some sort of low being broken. Okay. So right now there's no low. This was never broken. Peak below, no displacement, right? Okay. So now we're looking at this low. All right. Peak below, no displacement. All right. So then we keep moving up. And then we're like, okay, now we have kind of 3 equal lows here. We also have some equal highs up here. Okay. This is like the first time that we actually, again, looking at NQ, I want to see if there's some sort of SMT maybe. At this point, doesn't look like there was anything. Yeah, it doesn't look like there was anything here. But this could have been considered break of structure. Again, this was the first low that we actually got displacement. None of these lows have ever been broken yet, but this was the first one where we actually got a push below, right? We have a low created and we get a follow through. And then we look for that fair value gap. Boom, first fair value gap, right? I want everybody to really understand this because this is how being the best entry possible and being able to, you have to have patience to wait for that break of structure, right? Because there hasn't been anything yet. If right when liquidity swept, okay, now we're looking for a break of structure. There's nothing. We get a low here, not broken, no displacement. Low here, not broken with displacement. We get a low here, not broken, no displacement. We get a low here once we come up one more time. Okay, now we have these 3 equal lows formed. All right, are we going to break through it with big displacement? We do. We get a break below it in a follow through. That is what we want to see when we see a market structure shift. Now, it doesn't necessarily need to be these down here, but also that could be an entry too. See, you get a big displacement, pull back to some sort of 50%. If I was going to mark in a fib, you get that retracement, retrace back down. But for me, this would be the best possible entry because you get that first low created. This was the first low that actually got broken after liquidity was taken, right? This is the first low created that got broken with displacement and a fair value gap created. So this would be your short entry. Most likely my stop on this would be, I'd probably give this a little bit more room, probably this recent wick again. But because of the action, you have so many equal highs. Like there's 4 equal highs up here. That would sketch me out a little bit. That's why I haven't been liking trading ES, is because the action has been so slow that we're getting so many equal lows and equal highs. So first target on this would be equal lows down here. Second target would be this low right here. And then if I was to zoom out 15-minute, next really prominent low, it would be this right here. And then this would be a runner if you were to let one go. But again, this, I wouldn't take this trade because again, it goes into the afternoon session and I wouldn't take it, but you can see how our model played out even in the afternoon session, right? If you were to let this go, and let's also want to mark in 2, no really internal, I mean, this would be, I guess, considered internal swept, but this would be an absolute huge thing to mark in, but I do want to see what it leads to if I was to draw this in. To 2.5%, looks like right where that sell side is. So could see a potential continuation to take sell side tomorrow. We'll see. But yes, this was the first low that was taken after liquidity, right? So that's what we want to see. And it's external liquidity. That's going to be the best plays and the best trades that we want to take, is when we get an external liquidity taken, right? Not something off this move. We want to see a prominent high or a prominent low being taken. I'm sorry if this is a dumb question, but can you tell me how you know it's external versus internal liquidity? Does it refer to just for the day, or do you look at it for the whole day? Does it change? Good question. So when I talk about external liquidity, I want to take the range in what we're in, and I want to look at the most prominent high and the most prominent low. So for example, if I'm looking at, you know, this right here, the most prominent highs and the most prominent lows I see, well, let's start off on a bigger time frame. We'll look at like a 1 hour, right? So if I was looking at a 1 hour, the most prominent lows I see and the most prominent highs would be obviously this high, right? Because this was the high that we put in. It'd obviously be this low right here because this was the low that we put in today. So now this becomes low resistance liquidity run because these lows are stacked right here, which means if we were to come down and take one of these out, we're going to most likely take both of them out. This would also be external liquidity, this low, and then these would also be external liquidity, right? But if I was to zoom in, right, if I was to go to like a 15-minute, this would be internal liquidity, right? Because we're inside of this range of external. We have external here, and then anything in this range becomes internal liquidity, all right? So this would become internal liquidity. These equal lows down here would be internal liquidity. So when I talk about like a 5-minute as well, I'm also talking about internal liquidity. Like if I'm looking at this 5-minute here, this would be internal, this would be internal. But again, if I say something's external, it means whatever time frame I'm on, it's whatever that range is. So if I'm looking at a 1 minute, this would be considered external liquidity. And then this would be considered, well, this would also be considered external liquidity. This would be considered external liquidity, but this would be considered internal liquidity, right? Because we're in this range, whatever it is. So it's whatever range you're looking at. You take whatever the prominent high, the prominent low is, that would be considered external liquidity. But when I'm saying I want to take a trade off of external liquidity, I'm looking for a bigger time frame swing high or swing low, whether it be like this, right? We get a clear high. This would be external swept. You can see there's short setup there. This would also be external liquidity swept, right? Once this is swept, automatically push back down. This would be external liquidity swept, automatic push back down. And then this would also be considered external liquidity because this is the most prominent high that comes after this push down. When we push back up, this is the next high. Now, this is also external liquidity, but this is external liquidity because if we're looking at this range, this is the most prominent high that comes next once we push back up, right? There's no other high here. Like it wouldn't be this. It wouldn't be this high. It wouldn't be something down here. It wouldn't be this. It'd have to be, you know, it's clear to you that it's the high, right? Because after this, you know, there's nothing here. It's just a straight move down. The next high after this is this high here. So this is external liquidity. Hope that kind of answers your question. Do you still use TradeOvate? I use it for my small account, but most likely I'll be trading. I trade mostly on EdgeClear now. And I can't lie, I really do like EdgeClear. Has market been sweeping liquidity and bouncing off fair value gap since the stock market's been open? Are you talking about like been open, like the very beginning? Is that what you're saying? That's what I'm kind of getting out of it. I could not tell you. I have not looked at the charts when the market first was a thing. I could not tell you. How much is a small account? It's around 5,000 right now. So I started with 3,000, but I haven't traded it in like a week or two now. So I've been trading on the funded account for EdgeClear. I think what I'm going to do with I think I might turn the small account into a YOLO account, honestly. And how I'm planning to trade it is trade off of big liquidity sweeps. So like if we sweep like this high and then we get a market structure shift, I'm literally just going to enter a short position and target like external sell side, like get a massive move, you know, like if I was like, for example, for my small account, I'm like, if I get this market structure shift and I get a short entry, I'm just going to enter short and some micros, set a stop, target sell side, and then just let it go. And then not, and then kind of see how that goes and see how that strategy works. Just letting the market do its thing and not watching it. And then seeing how the growth works with it. I have a new thing I have been back testing. Want me to share? Yeah, of course. Always. Definitely want to look at new things. Thoughts on ES and NQ movement overnight? I think it's going to bleed. So going into tomorrow, we have, let me take off all this stuff here so we can clear the chart up a bit. Oh. So going into tomorrow, I am bearish. Now, looking, actually, let me take a look at NQ first, because most of my bias is going to come from with one. I want to see NQ as well. So again, we're just stuck in this range right now. But since NQ took internal, We definitely could bounce to take external, which is from these highs on NQ. NQ looks more bullish than ES. ES looks more bearish while NQ looks more bullish. And the reason I say that is if we zoom out on NQ, like if we were looking at a daily, looking at the daily, we've had a push up. We're holding this daily fair value gap. We had that push up. Now we're just, again, look at these daily candles. Like, look at this. This is why the action has just been so bad recently. We've just been stuck in this range, right? There's no expansion. There's really nothing. But I honestly, I like when we're in a consolidation like this, but not when the action's like this. So we swept these highs on ES and NQ, which means we should target sell side down here. That's what I'm starting to lean more towards on ES. I would want to see ES come down and sweep these lows, potentially retest weekly open gap, then come down and sweep these lows. Because notice how we've really not gotten a prominent sweep of a low on ES yet, which means we're still technically bullish. Since we haven't taken these lows outright on a bigger, like if we were looking at a bigger time frame, like a 4 hour, we've had no market structure shift, right? Technically no market structure shift. We're still in an uptrend. None of these lows have been swept. We create a low here, higher low, higher low, higher low, higher low, higher low, higher low. There has not been a single prominent low on a 4 hour time frame that has been swept yet. So technically we're still bullish. Now, I would like to see us start heading back lower, especially back to previous weekly opening gap. That's what I would want to see going into tomorrow is a head lower back to weekly opening gap and to take out sell side from at least these two levels. But if we are looking at the chart overall, we definitely could bounce from here. Since we swept this low on NQ, we formed SMT. Even though we took this prominent high, again, we're still in this range. So this is technically would be, if we're looking at a 4 hour, this would technically be internal sell side on a bigger time frame. So this would be external. This would be external. So since NQ took external, we formed SMT on ES, then we could bounce from here to take out external going into tomorrow. But honestly, I have no strong bias. Again, I always say most of my bias comes when I wake up in the morning and I can actually see what happened in the overnight session. That's what's really going to give me my bias, because I could say something now and then like this high gets swept tomorrow, and then in the morning I'll be bearish, right? You think the news regarding Tesla and all the data earnings speaker tomorrow will prompt some downward pressure overnight? It might. It honestly might cause some chop too. Again, there's no really way to predict how news is going to affect it. All we know is that news will have some, most likely will have some effect. Whether that's good or bad, I don't know. Our job as traders is to recognize what happens in front of us and, evaluate that information and see if there's any opportunities, right? Our job is not to try to predict what happens next. Our job is to take the information given to us at that very moment and take an educated, decision and put risk management on the board. So two ways tomorrow, honestly, expecting in the overnight session to just chop in this range before we take sell side or buy side. So honestly, tomorrow or in the overnight session, I'm kind of expecting like something like this. Actually, that's way too many. That's way too far. That goes into Friday. There we go. I'm expecting something like that. I still think that's too much, actually. Whatever, like something like that. I don't think that we'll have a prominent move in the overnight session. We might. I mean, we've been having really big moves in the overnight session lately, and honestly, every single day we've just had pretty much slow trend days. We have like the trend this whole week has been, we have some sort of consolidational move in the morning, like some sort of fake out, and then we get some sort of trend move for the day. Like if we look at Monday, we had consolidation down here, and then we get a big move, and then overnight session, big move, open consolidation, big move, overnight consolidation, big move, Wednesday open consolidation at the lows, big move, starting to get a big move right now in the overnight session. And then I'm expecting either some sort of consolidation here, but I think the draw on liquidity, to be honest, could go either way. I don't really have a strong bias because this is technically internal liquidity on bigger time frame. And since we've swept these highs, we could see lower. But since NQ also swept that low, right? This would be still SMT. We could also see us bounce back to take external liquidity from this high. And if we're looking at a daily here as well, ES, again, look how these dailies are starting to form. Wick down, pull back up, holding. Wick down, pull back up, holding. And we have not taken this buy side level out, right? We have not taken this big buy side level out. So I'm most likely expecting us to take out this buy side level in the coming weeks, honestly, because the chop, I'm not even going to say in the coming days, because it could honestly happen whenever. But I am expecting this high to get taken out eventually. Any questions? You need to clear up your charts a bit. I know. Well, all of the stuff, like, let me see if what I can clear right now. I can draw this stuff in later if we come back down there. I'll keep that in. Previous weekly opening gaps. I'll keep some of those in. All this stuff I don't need. It's just like a rainbow. It's all the different weekly opening gaps. I'm going to take off this weekly opening gap just because it's pretty much overlapped with this other one, and I know where it's most likely to go. That's better a little bit. What's weekly opening gap? So when Friday closes, it's the gap between Friday's closing price and Sunday's opening price. So if we were to look at like this, so this blue one is the new weekly opening gap. So this entire week, you can see how we always gravitate back towards this level. On Monday, we get a sell off. We go right back to weekly opening gap. We go above it. We go right back to it. We go down. We go right back to it. We go up. We go right back to it. And that's mostly what happens when we get weeks that we're kind of stuck in a range. So if I go back to the 1 minute and I'll show you where I created this. If you look at the bottom here, it says Friday 14th, April 23rd, 1659. So this is the closing price on Friday. And then when Sunday markets open, which this right here, Sunday 18, you take the closing price, but since it's a doji, you just take whatever that is. And then you take the opening price of that Sunday price. And then this becomes the weekly opening gap. And so this entire week, this is where price is most likely to redistribute or rebalance itself. And this is how we know, where price is most likely headed towards. If we take liquidity, where we're most likely going back to. Is it possible to click of the magnet without clicking on it? What magnet? I'm confused. What's better, FFN Express package or regular one? What's the difference? They're pretty similar. I think the Express package just makes it so that you don't have to like have a certain amount of days, I think. Let me see. There's a difference, but I'm not sure what it is. There's no minimum days. So honestly, I just do the regular one. And the reason you should do the regular one is because you have to have a consistency rule anyway, which makes it so you have to have, 15%. You can't go over 15% daily, right? If you do, then you can just, take a quick little losing trade and bring it back down. Because if you take more than 15%, it'll up your price target. So honestly, I don't think it's worth it because even though it's no minimum days, 15 days for the minimum days for the 50 account, it'll most likely take you somewhere around there if you're following, consistency and you're following the consistency rules. So to me, it doesn't really matter. The one that drags the drawings to the wick, like how it like snaps onto it, is that what you're saying? How to turn off the magnet. Is there, I think there is a way. I'm not sure though. Scales. Magnet icon left bar. Oh, there we go. Boom, right there. There you go. I definitely like it on though. Yeah, magnet on icon left bar right here. After you get a live account, they will put a target to reach to get withdrawal or no? No. So basically it goes through 2 phases. The first phase, once you pass it, you pretty much have passed. And then while they're setting up your live account, you go to a second stage. And they pretty much give you a demo account, which is your live account. But while they get this, because they have to, since they actually fund you with live accounts, which a lot of like Apex does not fund you with an actual live account. It's still demo. They just pay you out. But funded future, like you're trading with actual cash when you get funded. So when they're making all those transfers of money and then giving you the account, you get to trade on an exhibition account, which all the money you make on that account while you're waiting for the other one to get set up, you'll make all that money. And then once you make that money, it'll get transferred into your funded account. So then you have a cushion to work with, which is, I love that concept, because a lot of traders, when they get funded, you still have that liquidation level, right? You have to build a cushion for yourself, but you get an opportunity to build that cushion while your account's still being set up. So let's say like I get funded and then I'm going to my exhibition account. They're still setting up my live account, and like I make $2,000. So that 2,000 gets transferred to my live account, my actual funded account when I get funded, and I can decide to withdraw. Like I could withdraw that the first day if I wanted to. If I made 2,000, I can still withdraw that. But the best thing is you also get to keep that as a cushion, because you'll still have that liquidation level, but it won't trail. But you'll actually have a cushion now. So if you take a losing trade, you already have money to cushion you to cover up whatever that liquidation level is. But you can also withdraw it if you want. Yeah. Going back to external, internal liquidity, do you usually stay away from trades when it deals with internal liquidity? Then I feel like I have been losing trades because I try to play off internal liquidity levels and then I get stopped out or just reading it wrong. Yeah. So the biggest struggle with a lot of new ICT traders and trying to figure out what the market is my biggest recommendation is whenever you're looking at taking some sort of position, zoom out and see if the draw on liquidity is in your bias. Like for today, since NQ swept this low, right? The draw on liquidity on ES would be this low. It would be this low, but we didn't take this low out. But why is that okay? That's okay because if we look at NQ and we look at the 1 hour, NQ did take liquidity, external liquidity, right? So NQ swept this low, now forming an SMT divergence, right? So this is now bullish. So what's the draw on liquidity now? The draw on liquidity is now this high. So why take any other short here, right? Like let's say like that's what I'm talking about right now. The short that I took here was a bad trade because I failed to zoom out and look at what the draw on liquidity is, which was up here, which means we're most likely going to trade to this next. Why would I take a trade? Like, let's say this right here, this would not be a good, liquidity point to trade, right? I shouldn't take a short taking it off of this trade, because if I zoom out on a 1 hour, the draw on liquidity is this next high here. So that doesn't fit in my bias, right? So whenever you're taking some sort of trade, you can take it off internal liquidity, but make sure that bigger time frame, the draw on liquidity is in your favor, if that makes sense. Why do you now trade a personal account if you have the money? Why? Oh, why? I'm guessing you say, why don't you trade a personal account? For me, it's honestly, I've talked about this many times, but this whole year for me has been planned for me to focus on mastering my edge. And next year is the execution for me. Like I used to trade with more size than I do now. I used to trade, like I would have 5K days, 10K days, like I would go down 5K in a day. And I realized that I was too focused on the money aspect of it instead of the actual trading aspect of it. And I knew, now I made good money from it. I wasn't losing, but I got to a point where I realized that if I, kept trading it the way I would most likely going to go down a rabbit hole where I'd give that money back. So I decided this whole year for me, again, market's not going anywhere. I'm young. I have time I still have a very long journey left in my trading career. And this whole year is planned on mastering my craft and mastering my edge. And when the market actually does present itself to go back to, what it was, or, whatever the new market is, and I'm ready to adapt and I'm ready to execute, and there's a lot of opportunities, I will be ready to be able to do that with the capital that I want to. But right now, I'm focused on mastering my edge, having the consistency. I don't care about making a large amount of money because I know that that will come to me in the future if I focus on mastering my edge first, because that's what's actually making me money. Trading professionally and trading proficiently is what's going to make me money. So trading on a funded account gives me the opportunity to risk less capital, also, make a decent amount of capital, but not, and still master my edge and still get experience and back test every single day. You're right. I've been trading in a personal account, and I now is my loss maybe 9,000 euros, and I'm still in my personal account with 3,500 and having good profits. But now I decided to go to funded. Yeah, exactly. Especially when you have the opportunity to take advantage of a funded. Proved, like, people come to me where they're like, should I fund my own account with a couple $1,000s when I first start, or should I get it funded? I always say get a funded. And the reason is because you need to prove to yourself first that you can grow a funded account before you actually risk your own money in your own hardworking cash, right? Because I made the exact same mistake. Right when I first started, I threw in an account, blew it up, threw in more money, another account, blew it up, because I didn't know what I was doing. I never proved myself that I could grow an account. So treat a funded account like it's your actual account. Prove to yourself that you can actually grow it consistently for at least a month straight. Come to me, right? Start a funded account. At the end of the month, journal all your trades and come to me with your journal. I will literally do a free one-on-one session with you. If you can go a month with your funded account and you can show me your journaling with every single day, your P&L, and the consistency that you've done with it, I will personally do a free one-on-one session with you and talk and go run it down, because that's what I want to see. I want you to prove to yourself first that you can grow a funded account before putting actual capital on the table, because you're still going to make money from it. But I want you to actually prove to yourself you can do it first and build that confidence. That's the biggest thing, is building confidence in your strategy, building confidence in your edge, and building confidence in yourself that you can actually fucking do this shit, right? And without risking a lot of money. Again, trading is mastering your edge first. All right. So, last thing I want to cover on. I know a lot of traders who have been struggling these last 2 weeks. I'm sure that a lot of you probably, if you're on TikTok or whatever social you're on, a lot of traders this week have been struggling. I'm currently in the last 2 weeks. I'm still up from last week, but not a lot. I'm currently down on this week, from the last 2 days. And it's because, now I don't want to say it's because, I'm not going to blame it on the market, but we have been having a lot of rough action that people have been struggling with and struggling to read. But as traders, the only thing that we can do, and the best thing that we can do, is to avoid periods like this and to avoid slumps or whatever it is. If you're on a losing streak and you feel like you just can't get out of it, my biggest tip is, number one, go back to the basics. Go back to the basics. Why are we trading? We trade off liquidity. Okay. Now, liquidity is not, our edge is not broken. That's the first thing you do. A lot of people that, like, they start losing and they're like, oh, my strategy is broken, I'm going to find something else. And then they take all that hard work that they've put in with the strategy they've been building, and then they drop it, and then they go to something else. And then that's just all a waste of time. Your strategy is not broken. Trust me. All right. You're just not adapting, and you're not, doing what you should be doing. There's always going to be some reason other than what you're looking at. You just don't want to take the accountability for whatever you're doing. So take accountability, see what you're doing wrong, see what you're doing right. For me, I failed to take advantage of the market in the sense that, since we've been having such clean action, or not clean action, but we've been having such strong moves, it's just been search and destroy on liquidity, right? We come out, take this high, we automatically go to next sell side. All right, boom. This taken, go back to 50%, automatically comes back down. All right, SMT, big move back to picking up buy side. There's really not been any sort of action where I've wanted to see. And especially on a 1 minute time frame, we have not been getting good action for me to scalp. And I'm a scalper, right? I like trading smaller actions. So for me to be able to, I have to adapt to this, meaning maybe in the coming, if this action keeps happening, in the coming week or whatever it is, I might try trading on a bigger time frame, right? Trading our edge on a bigger time frame. We're still trading the same model. We're just allowing it more time to work out. And I'm trading less size, because that means I have to have more. My stop is looser. For example, we have a 5 minute SMT here. This could be break of structure here, pull back to fair value gap. If I was to enter long here in this fair value gap, targeting, whatever it is, let's say this, weekly opening gap or whatever it is, my stop for this to be invalidated would have to be this low here, right? But if I zoom in, if I'm trading my normal size, I'm taking like a fucking, $4,000 or $5,000 loss, like with that trade, right? So, but since the action's so tight, the models we're trading they're not broken. They're still working. But when we zoom in the way we are zooming in and what we normally trade, which is I normally trade the 1 minute, it's 2 minute, 3 minute, we get action like this. And it's very hard for us to, take advantage of the market when, even though we're, if we look at a bigger time frame, like a 5 minute, even though it looks like, we're having, actually the 5 minute looks awful as well too. But like a 15 minute, we're having, a good move up. But since we're looking so zoomed in, which is what I normally trade, normally it works out for me, but sometimes there's weeks where it doesn't. It's adapting to that, going into the market with good risk management, right? The only thing that's going to hurt you is if you're over leveraging yourself, over positioning yourself, and you're not following your stop. You're giving yourself too much room or whatever it is. But sometimes you need to do that, give yourself more room, but you have to adjust your position size accordingly to what that is, right? So biggest thing when in a slump, lower your size, build the confidence back up, adapt to the market, understand what's been going on. Okay. Like, for example, let's take a look. First 3 days, it's been Monday, Tuesday, Wednesday. What has been a trend this week so far? For me, I notice that we get some sort of expansion move, right? Every day we're getting some sort of expansion move. On Monday, we get a sell-off in the overnight session. We get an open, we get an expansion move targeting buy side, which would be this internal buy side here, right? Overnight session, get a big push up, take out buy side. Okay, expansion move to the downside. All right. But if we look at zoom in as well, like on Monday or Tuesday, this was also not really good action, right? We still got some chop. This was better action than it was, but then the rest of the day we just chop, right? So that's what I've been noticing is the last couple of days we've just been getting expansion moves, which is not a bad thing. We just have to adjust to whatever that is. We have to keep that in mind, right? Keep in mind whatever the price action is. And something I've also noticed is that NQ has been having a lot cleaner action than ES, and that's making me want to trade NQ more. That's why I said going into tomorrow, I'm going to be paying a lot more attention to NQ probably than I will be looking at ES. I mean, I'm still going to be looking at both, but I'm most likely expecting the same trend where NQ will be providing better action. So if we get a better setup on NQ, I'm most likely going to take it on NQ than I will be on ES. Why do you trade more on ES? I've just mostly traded on ES. When I learned ICT concepts, I always traded on ES. And I mean, looking at like for the trade in the morning, this trade on ES is exactly what I wanted to see for my model. Like I got the fair value gap. I got everything I wanted. We had equal highs, right? We had equal highs up here targeting liquidity. This to me looked like a better setup. Just when action started to form, it got choppy, right? I entered before all this chop. Like I didn't know this was going to happen, right? It just so-called happened, right? The trade looked good. It's just once market open, we started getting chopped, right? But on NQ, the setup was not necessarily as much there as I wanted it to, right? Because on ES, we get internal liquidity swept. We have SMT. I meant NQ had SMT as well, but for me, once we have SMT here, I want to see some sort of break of structure, right? No really high broken until this would be the high being broken. And once that high is broken, there's really no setup after that, right? We get that expansion move. I wouldn't really want to take any longs once we pull back. Now I did take, what long did I take? I took this. I did take this long on NQ. My first target was this high here, and then I wanted to target equal highs up here. Again, I know what the draw on liquidity is. It's just the action. Like I know where the market is going to go. It's just the action that's hard and being able to position myself. So got a good entry, bounced, didn't hit my first price target, would have been this high, never got filled, came back down, and then I ended up getting stopped out. And then we go right back to, where price is most likely to go, but I can't control the action. So it's just being able to, if I follow my rules, that's all I can do and be able to adapt to it in the future. But again, on a bigger time frame, the trade never invalidated, because if we're looking at a 5 minute, this 5 minute fair value gap still held, right? If we're looking at a bigger time frame, right, our model still plays out. We have external liquidity swept, we have SMT, we have a 5 minute SMT. We have break of structure. We have a 5-minute fair value gap. This is the draw on liquidity. We never broke through this, but since I'm zoomed in on the 1 minute trying to trade how I normally trade, I get chopped up. And that's been the trend this week, is we've been having a lot of choppiness, but our model is still holding on bigger time frames. So going into tomorrow, that's what I'm going to pay attention to, is looking at a 5-minute model, 15-minute model, and trying to base trades off of that more than just a 1 minute, and then trading less size but lower stops. And when I take a trade tomorrow, I'll let you guys know, especially if I see some sort of setup like this where it's on a bigger time frame. It's still the same model we trade. We're just going to have to give it more time, have to take this chop, because especially if we're trading off like this, we're going to have to sit through all of this, right? We're going to have to sit through it, but it still doesn't mean our trade's invalid. The trade's still valid. We just have to sit through it. And as long as we know we're confident in our trade, we're confident in our edge, it works for us. Because every single day this week, we've seen our model play out. Every single day we've seen our model play out. It's just failing to position ourselves accordingly to catch those models, because we're trading a model on a smaller time frame than what the action has been suitable for this week. Get that? Any last questions before we end the session? Yep. Improvise, adapt, overcome. All right. That's all I have for you guys tonight. I will see you. If anybody has any extra questions, just feel free to @me in the Discord. I'll get back to you. Enjoy the rest of your night, guys. I'll see you tomorrow morning. Hopefully we can get some good action. Again, overnight session, no really strong bias. We swept this internal liquidity, but on a bigger time frame. We have external swept on NQ. Could definitely see a bounce, but honestly kind of expecting some kind of chop in the overnight session, but we'll see. I'll see you tomorrow. Peace. Enjoy the rest of your night.